I was not going to make this a live trade, but let's make it a live trade because why not? Looks like we came up, took out these daily highs, swept them out, currently pushing to the downside. Price action came up on the 15 minutes, swept out these 15-minute highs as well before shifting, changing character with this fat Diddy BBC candle to the downside. What else is going on? And that's as of right now. We do have news data release. We have ISM manufacturing and JOLTS. Oof. So we're going to see how that affects the market. We can clearly see what market's doing beforehand. However, we do have this 4-hour fair value gap, this small one right here, and then this chunky hourly fair value gap that we could validate. But as of right now, I'm still overall bearish looking. Bearish draws liquidity on the day. Glad you asked. Said no one ever. Bam. Both of these are minor. The major, which is macro, let's go on the weekly time frame. Somewhere in this area. We're looking to retrace for the weekly fair value gap. Yeah. Currently, these are my 3 draws of liquidity. I don't think we'll come down for this overall sell side liquidity. And if we do, awesome. That would be the weekly retracement right there. But as of right now, we're going to see what price action wants to do. So I want to take you guys through this trade idea I executed on. Accidentally executed with too much risk, just a little bit, a lot of it, but I'll take you guys through it. So I was looking to see the continuation to the downside. Right now we are pushing to the downside. This was definitely a trade where my entry could have been improved, and by that I mean I was looking to execute at the equilibrium of the fair value gap. However, I didn't, due to not being prepared. I wasn't prepared. I wasn't expecting price to push up as fast as it did. Right here for that retracement, during this time I was opening trade of 8. I did not have trade of 8 open, so I was opening trade of 8, logging in, and then setting up the entire position while price was had already pushed into that fair value gap. So with that, I did end up getting a later entry. This is at the actual, obviously, trade 08 screen. I was looking to see this execution within the 50% of equilibrium right here. Price action validated this equilibrium. This was my trade idea. Okay, this is anabolic, but let me pause that for now. This is how it looked, just so everybody can see. Wanted to see the retracement continue to the downside. Risk rewards a little due to price action simply just liquidating. I'm really just trying to catch the small continuation, nothing large today. Just take what I can get. If the original idea was to execute upon this with around $200 risk. However, I went in with 6 micros, which at the stop loss I had is around $600 risk, 550, so it's a little more than I expected. And I guess that just comes with me not being prepared. And even then, while price action was within the fair value gap, I was thinking, okay, well, do I execute? Do I just let it play out? What do I do? But I just decided to execute upon it anyways because I wanted to see the outcome of what would happen. I typically, in the past, I would have not executed on something like this and instead waited for overall move again. You know, a macro high to be taken out, or I just call it a day and just go do whatever, right? But I'm starting to implement executing within retracements. I'm looking to continue to draw toward our desired draw on liquidity. So we're going to continue to see what happens with price action. my intention was to go in and de-risk. I was gonna do what I did the day prior, split it into two trades, just to continue to see how price action plays out throughout the day, whether or not it wouldn't, make a macro time frame retracement, or just simply make that micro time frame retracement and then continue to the downside. Yeah, I'll continue to update you guys with how the trade plays out, with whether or not we push back up, hit SL, make the macro retracement for whatever it may be. Um, really all I could possibly think of is that 15-minute fair value gap we have formed, and possibly that 30 before continuing to the downside. That is definitely possible. Before being bearish on the rest of the day. I understand how I got the risk I got. I didn't calculate for ES, I calculated for NQ micros, bro. Oh my gosh. Okay, so let's go into it. What is happening right now? Price action is pushing to the downside, but I wanted to let in my thought process with all that is going on. I was journaling it, fortunately. Emphasizing journaling more of my thought process during the trades to be able to know what trades to hold through and what trades to, I never manually close trades, but in that aspect, what trades look more probable than others. Currently, we are going to go in and adjust our stop loss into profit above this 5-minute high right here. We'll go do that right now, and I'll actually show you guys what I was typing down here with the aspect of my take profit. So we're going to move stops to bam, then delete this. If there's a way someone knows that you can kind of, by moving your buy stop, it automatically deletes the old one, please let me know, because I have times where I forget the buy stop is open, the old stop loss when I adjust it, and then I either hit stop loss, I break even, and price action continues the upside and it re-enters me in. Now, regarding our take profit, this is our original trade idea, take profit simply into the hourly fair value gap. However, price action did get a little kick of volatility within it. I'm not saying it's good to do this. However, I'm trying to analyze and see as of right now whether or not we have the ability to continue a little bit lower in order for us to target the equilibrium of this hourly fair value gap for a nice solid 1 to 2 restore. That to me would be solid on the day. That really would. Regarding that take profit, no need to target more than that, because I don't know how far we're going to retrace. My next draw liquidity after this fair value gap really would be here, and I don't think ES is going to move 2% on the day, and if we do, we're moving 4% on NQ. That's just how it is. Anyways, we did have a change of character to the downside and broke structure. That's exactly what I was looking to do on the 1 minute time frame. That was clear too. Once 1 minute broke structure, we were chopping for a bit, came back up just a tiny bit, validated this inverse fair value gap, then pushed back to the downside. I typically don't use inverse fair value gaps, but I like to point them out when I can point them out. Just formed this 5-minute fair value gap right here. I want to see this validated before we continue that push to the downside. With regarding our take profit, I think we'll continue to trail it. The next spot will trail it. If we do want to see price action hit that equilibrium, will be above this 5-minute fair value gap. Decided to get in a scale trade position. Let's break it down even further. I mentioned typically I would scale into this, and guess what? I decided to scale in. I like how price is looking. Got in right at the wick, the top of the wick on this trade position. So we're going to continue to see what price action wants to do. This is how it looks. I want to see price action validate this 5-minute fair value gap and continue to the downside. Our stop loss is at full break even, if I understand correctly. We are in 4 micros in shorts, and our stop loss, our buy stop, is 4 right at this high. Our max loss is around $15. How this works, I actually don't understand at all, but I'll probably go in and do the math after and understand how like it averages out and how much more profit you typically make depending on whatever the case is. We were in 3 micros earlier. We added 1. Just see what price action wants to continue to do. If it changes the character back to the upside, we could see a possible macro retracement, and this is the new low day. And if not, we'll continue to the downside. So we did get stopped out at break even practically. Little $15 loss for the risk we actually had on. It's not bad at all whatsoever. Right now, what price action is planning to do, I'm not 100% sure, but I will say that we did come down, retrace for this 4-hour fair value gap, and swept out sell side. If I go to the 4-hour band right here, so we did sweep out sell side liquidity, meaning we do have now all the potential to go back to the upside. It was a pretty solid trade, but let's break it down because there is definitely places I could have improved within the trading. I think I had more mental clarity after or upon the scaled in trade position. During the actual trade execution, it was a lot more messy. Upon re-entering, closing the original, because I had been over risked and fixing the risk management of it, I think that's when I got more mental clarity on the trade position and actually understood everything, and that's when I was able to go in and really break everything down deeper. But let's go into it. So our overall target, of course, now note we did have a relatively large stop loss. If we had the opportunity to have executed somewhere up here, somewhere in this range, obviously our stop loss would have been a lot less, right? Stop loss would have been a whole lot less, allowing us to target this sell side liquidity instead of trying to target a little bit lower. I guess that's one thing I say we can go in and improve on, in the aspect of going in and following our trade targets, which is typically draws of liquidity and not more so fair value gaps or the equilibrium within fair value gaps. Although I do have times where those are our overall trade targets simply because of how price action is trading at that time. But as of right now, our trade target should have and could have really been this 4-hour fair value gap and that sell side liquidity, mainly that sell side liquidity, even though they're in the exact same spot. If we would have been able to get an earlier trade execution, but guess what? We didn't. So our trade target was within this 1-hour fair value gap, which was still a solid trade target, solid risk reward. We did do good on the scaled in trade position and fixing our original trade position with that risk reward. I think if we could have gone in and been a little bit more prepared, that would have allowed us to have more mental clarity with the situation compared to feeling like, whoa. As of right now, NQ did take out that sell side liquidity as well, so they both just took out macro sell side liquidity on the 4-hour time frame. NQ unfortunately did not give us our equilibrium retracement within that 5-minute fair value gap. Even then, the stop losses today were relatively large, mainly because of news volatility and all that other fun stuff. Typically, I don't have an 86-point stop loss, but today we did because we adjusted to market conditions. I'm gonna go in and journal this trade. So in premise, what did we do right? What did we do wrong? What could we have done better? One, what could we have done better? Something we definitely could have done better was our trade execution, being more on timing with our trade execution, having been more prepared than unprepared, because we were definitely unprepared today trying to get in our trade execution, and unfortunately I didn't even record it. That's how unprepared I was. I didn't even record it because I was like, oh, la di da di da, price action probably gonna take a minute, and then price action retraced in literally 70 seconds while I was looking at NQ. And by that time I was like, oh, okay, now we need to rush, open trade over, get our trade execution, calculate the proper all that fun stuff, which we did. But in turn, if that was on a live account, guess what, we, instead of risking, let's say, $200, we would have accidentally risked $2,000, you know, or instead of accidentally risking $2,000, we risked $6,000, you know. And that's that measure of being unprepared. That's what happens when you are. So that's one thing we definitely could have done better, and we will do better in the future to continue to be prepared, have everything set in stone, and continuing to pay full attention to um our charts when we are looking to get a trade execution in upon a trade idea. As soon as we notice a trade idea, actually it's good. As soon as we notice the trade idea, we will pay full attention to that specific trade idea. Being able to have Trade08 open or whatever execution platform open while looking to possibly execute upon the idea, right? Next, what did we do wrong? Something I would say we did wrong, apart from the risk management, would be honestly nothing. Price action today showed us an opportunity that we did execute upon. It's a clear opportunity. Nice stop loss. Kept a solid SL. This was the highest point I could have kept my SL. The lowest would have been up around here. This would have allowed us to target this sell side liquidity. However, I probably still would have possibly targeted this 1 hour equilibrium. But with that being said, if I would have gotten stopped out from here with this high, I don't think I would have been too happy with that, primarily just because the actual new range was starting from here. So I kept it above the new range we had started. Here. I can mark it out to make it a little easier to see for the people that don't, because my charts are pretty dark. New range is already there. Bam, 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 and then bam. Then we'll probably form a new range once we come down here, push back up. There you go. That's something we definitely, I say, did wrong. We didn't do anything wrong, but could have maybe done a little bit better. But however, it would have been the risk to reward on that actual trade idea, not the actual risk, the dollar amount, but the risk to reward of the trade idea wouldn't have been worth it. Does that make sense? If I would have gotten stopped, I would have been like, damn, okay, now I need to go in and re-execute again because my stop loss was too tight, right? Pointless losses. I just want to avoid. And how can we go in and improve? This is a big one. How can we go in and improve from our overall trading with the day? One, skilled in trading positions, being able to understand those and being able to understand, okay, how much do I want to risk? How much risk do I want to put on top of the risk that is already on the table? Typically, you don't scale in trade positions until, well, your stop loss is at break even. That's one thing I finally have begun to understand, where to properly set your stop loss above certain specific highs and lows. Because I used to set my stop loss at break even wherever, right? But being able to understand scaling into trade opportunities and executions, understanding where those stop losses should be, allowed me to understand, okay, where should my break even stop losses should be, or where should my trailing stop losses be. So that definitely taught me something beneficial. So with stop losses, being able to continue to properly trail your stop loss, very, very important. scaled in trade executions. Understanding the timing and the risk management aspect of it is really, really important, and how it actually works. The risk on the table that is put on. I guess that counts as the risk management aspect. And then lastly, being able to execute on a retracement following overall price action. Let me explain that. Currently today, price action was liquidating to the downside. Big fat diddle stick to the downside, right? Now, obviously there's always two scenarios. One, you can push back to the upside or continue to the downside. Or you can push back to the upside, retrace for something, and then continue to the downside. Or vice versa, right? I guess 4. But with this case, we continue to the downside. It's the aspect of being able to understand, okay, when price action will continue to the downside and not make an overall macro trade retracement stopping us out, and when price action will. I think that's something I want to go in and backtest. Today, I knew that we would continue to the downside simply based upon how the lower time frame was executing and what we were validating on the lower time frame. I guess that is definitely a way to be able to tell. So, but apart from that, that's definitely what we could go in and do better. But the main aspect is really preparation, being able to be prepared, because if we were prepared, then guess what? All those other things that I just mentioned would have been out the picture because we would have been prepared. So apart from that, that's the trading day for today. Break even trade, gonna go and journal it, do all that fun stuff, and I will see you guys tomorrow. You could read this if you want, pause to read it. Didn't write anything here. These were our pre-market analysis images, but there you go.